Yes,
Yeah,
yes.
we're not doing too bad.
You may see some people moving your way.
I told you, Mark, we have office space. Bring them. We're happy to host you.
We're starting to work on that pretty hard, actually. Not so much from Pittsburgh, from Philly and New York, though.
Okay, you guys are live.
Okay.
So you guys had fared pretty well, right?
Yeah, we haven't had a death in a while. You know, a couple cases every day, every other day, but it's not terrible. Okay, well, everyone, please stand for the pledge. I pledge allegiance
To the flag of the United States of America, the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, we'll call this pension board meeting to order Wednesday, August 5th. Call for, entertain a motion to approve the minutes of the last meeting. I'm sure everyone's had an opportunity to review them.
Make a motion.
I'll second.
On the question? All in favor?
Aye.
Aye, okay. Performance report, CS McKee, 205002. Here to speak on that is Mark.
Okay. So I was just looking back just to give some context of a few comments from the last time I met with you in person, which was in February. And it's pretty amazing. And what I had mentioned was, I can't believe I was able to say this, but I said, the economy ended the year on a great note with the S&P up 31.5%. Consumer spending was as strong as ever. Unemployment was at 3.5%, the lowest since 1969. This helped for strong personal consumption. Investor confidence was at an all-time high, and your portfolio up for 19%, which was really, I remember saying how amazing it was. And we beat the median public pension plan by over 2%. It's just amazing to look back and then to see what's gone on. Even into the first quarter, things were going really, really well. And then all of a sudden, it's affected much more than the investment world. I know it's affected people's lives much more than the markets. And I know, at least at our company, that's what we're trying to really focus on. While we are working remotely, but we've done that several times when we've had water main breaks and whatever might happen. But frankly, we feel like we're as efficient, if not more efficient, working from home. The only ones that are having some tough issues are those that have little kids and don't have childcare. So we're trying to work with them as much as possible. But what a different world, from when we last met. And just fortunately, there was some crazy bad news in March and April. And just to give you some context there, I just want to give you a few, and then I'll get to the good news quickly. But, we experienced the shortest time period ever to go from a market peak to a bear market. It only took us 30 days. And the previous shortest period was 9 months. It was the worst quarter. The first quarter of the year was the worst quarter for the stock market since 1997. And actually, the first quarter was the worst first quarter that we ever had. And I'm not going to give you all the stats because you'll get depressed. But the yield on the 10-year Treasury bond hit an all-time low of under 50 basis points, which I know when I got into the business, the 10-year Treasury was at about 20%. So for that to be, below 1% is pretty amazing. Manufacturing output dropped the most since World War II. New home construction dropped the most since 1984. 5 weeks unemployment claims hit 26.5 million, averaging 5.3 million a week. Those were really great depression level statistics. But the good news is the stock market has rebounded 46% from the March 23rd low, which is the fastest bounce from a bear market to a bull market ever. The S&P 500 is about even from the beginning of the year. And, you know, the bond returns are up about 4.5% to 5%. So with as bad as things were, we honestly wouldn't have predicted that things have recovered as much and as quickly as they have. One just real quick update, our partnership with North Square that I mentioned before that I discussed at our February meeting is going great. We're starting a couple new mutual funds in October, an international and actually a couple fixed income. We're in discussions right now to take over some fixed income assets from a large bank trust company out of Colorado. We've got access to a lot of other managers under our North Square umbrella. And McKee just recently over the last month took over all the operations for the company. So now all those operations are going to be based in Pittsburgh, which we're really, really excited about. So as far as the portfolio, you know, the overall portfolio had a great second quarter in absolute terms, returning almost 13%, which is about even with the market. Year to date, we're still lagging a little bit by about 5%, frankly, due to the conservative nature of our equity portfolio, even though our top holdings continue to perform really, really well. The domestic equity part of the portfolio was up over 20%. The index was just a little bit higher. And the S&P has really been driven over the last several years, but particularly this year, by really just a handful of stocks. And while we had a really good quarter, it's a really difficult investment environment for active managers when there are only 4 or 5 companies that are driving market returns. We've been adding value on the asset allocation calls, making some rebalancing decisions between equities and fixed income that have worked really well for the portfolio. But frankly, picking individual stocks has really been difficult. Since a large part of what our process is all about relies upon investing in quality companies at a reasonable price. We've not been able to invest in some companies that are driving the market, like Amazon and Netflix and Salesforce.com and Tesla. They're just too expensive. And they represent about 25% of the index. On the other hand, we do own Microsoft and Apple and Facebook and Google, which are all doing extremely well. We just can't own overvalued companies like the Teslas. And given the Federal Reserve's actions of lowering interest rates and their plans to keep them low for up to at least 3 or 4 years, along with other monetary policy measures, it's going to be pretty difficult for fundamental-based managers to outperform the market until this pendulum swings back the other way. So we're looking at possibly using some temporarily some passive approaches, some ETFs for just a period of time until we think active management is going to come back, because we do believe that these incredibly overvalued companies like Tesla are going to correct. They will start to fall, and when they do, we think they'll fall pretty quickly. So we'll be able to overweight some sectors that we think will drive the market, like tech. We've been overweight tech for quite a while, and we do continue to believe that certain parts of the tech market will continue to do well, particularly in this crazy world that we're living in right now. I don't think that 4 or 5 months ago, had anybody ever heard of Zoom before?
No.
I mean, my daughters told me what it was, but I didn't know what they were talking about. And now, we're comfortable with it. On the international side, we also had a big market rebound, up almost 13%, while the index was up a little bit more. Our holdings in a few French and Swedish companies performed really well after the March market collapse, while some stocks in Germany and Japan actually performed well, but a little bit less than the market, and that's why we underperformed a little bit. And here too, we're looking at the option to have one of the other portfolio management teams inside North Square in our new partnership, possibly take over the investment management of the fund. They've got a company that manages about $7 billion in global equities. Their performance has been awesome for a long time. So, this is one of the huge advantages of forming this kind of a partnership. We're able to look at all these different options. On the fixed income side, we had a really great quarter, up over 3.5%, which again, we would have never predicted. The market was up about 2%. The Federal Reserve activity drove stock and bond valuations higher in the quarter. We were able to add to our corporate bond exposure at some of probably the cheapest levels we've ever seen. We had a 10% overweight to the sector, and it paid off really handsomely as those bonds recovered from their first quarter lows. Corporate bonds added over 60 basis points to performance. Higher inflation expectations helped our TIPS position, adding over 25 basis points. The 5-year implied inflation is now at only 1.17, and the 30-year implied inflation is now at 1.56. We haven't seen those low levels for a long time. We also added to our government-backed securities, FDIC insured institutional CDs in the quarter. And that sector also added about 31 basis points to performance. And then finally, on the fixed income side, asset-backed securities rebounded strongly in response to the Fed's announcement of its term asset-backed loan facility. Commercial mortgage-backed securities also recovered, but not quite as much as other sectors did. So looking ahead on the fixed income side, we're really happy with the way the portfolio is positioned going forward. Everything had, when the market went in the tank in March and April, everything flowed to treasuries. And very quickly after that, everything started to flow back into corporates and government agencies, and we were able to take advantage of that to outperform. So as far as our outlook looking forward, I don't know when we've had this much uncertainty in the market. The only thing I know will happen, interest rates are going to remain low. And there's some good to that and some bad to that. It's going to be tough to suggest any direction in the markets until things calm down with the whole COVID thing a little bit. I know it's lasted a lot longer than any of us expected. Market volatility on the equity side are making things difficult to navigate, but that will create opportunities here on the active side soon. Well, the volatility on the fixed income side is definitely to our advantage and always has been. So, as we see opportunities to make tweaks to the portfolio, asset allocation changes, using some different conservative vehicles, we will, and I'll just keep you in the loop. So all in all, from where we came, we're actually, relatively positive for the rest of the year. We don't think that the election, no matter how it goes one way or the other, will affect any things long term. There may be some short term hiccups one way or the other, either up or down, depending on who wins, but we don't think anything long term. We think what's far more important is that we figure out some things related to a vaccine and get the economy back running as it had been prior to all this. And then, other things are, trying to work out agreements with some of our partners like China. We think all the other things are kind of simmering and below the scenes, but we do think the biggest thing that would help all of us is if we, can get past this COVID-19 issue and God willing, be able to come up with some kind of a vaccine that people are comfortable with. We're just really thrilled that we've had a 46% increase in the market from about 2.5 months ago.
Mark, the hearing, the congressional hearing the other day where Google and Apple and the antitrust discussion they had, Facebook, and what kind of effect will that have on the market?
Well, it's a good question. I read a lot of articles like that night and the next day, and I talked to our tech folks. They don't believe, at least what we've read and what our folks believe, they don't believe that there's going to be any kind of a major breakup of those companies. There seem to be more at the hearings itself, there seemed to be more discussion between the committee members, angry about different things, wearing your mask, not wearing your mask. And then what a real telling thing is, if you look later that day and the next day, those companies all not rebounded, but they had, like Facebook they let out their earnings, and Apple was up 10% the next day. So our thought at this point is that those companies are going to be able to continue to work as they have.
Okay.
That's our guess.
Okay. Anyone have any questions for Mark? No.
It's really good to see everybody. I'm getting really sick of being at home. I can tell you
Oh, yeah, this Zoom is getting old.
that.
We're not going to be able to see you at CCAP either, Mark. It's a virtual.
No, I
this
know.
year.
And you know what? And this year was so close. It was only about an hour from my house.
Oh, nice.
When you know it.
Donnie, do we have to have a motion to approve Mark's report?
Yes, Commissioner, we usually do, yes.
Okay. At that point, I will entertain a motion for 205002 to accept C.S. McKee's report.
Motion.
So moved. Second.
On the question, all in favor?
Aye.
Aye.
Controllers report, 20. Thanks, Mark.
Thank you.
20
Thank you, Mark. Good to see you.
Thanks, Mark.
Yeah.
205003. Mr. DeBillio.
Yes. The monthly Lackawanna County Employees Retirement Fund checking account bank reconciliations were reviewed by the Controller's Office. The months reviewed included February 2020 through June of 2020. No discrepancies were found between the reconciliations and the general ledger. This bank account is used to issue monthly retirement checks. The general ledger balance as of June 30th, 2020 was $989,152.45. The Controller's Office verified the total amounts dispersed for retiree taxes and other services and agreed to the general ledger total pension trust account for the months February 2020 through June of 2020 and found no discrepancies there either. And that concludes my report.
Anyone have any questions for Mr. DeBillio?
Nope.
In that case, I'll entertain a motion to approve the Controller's report 205003.
I'll make that motion.
I second.
On the question, all in favor?
Aye.
Aye.
Okay. Members of other business, I do have one thing I want to do. Anyone else have anything they would like to talk about? We did not reorganize at the first meeting of this year. So on that, considering that we need to do that. So I think we need to do that, and I would entertain a motion to appoint Ed Karpovich as the chairman of the pension committee.
Second.
On the question, all in favor?
Aye.
Aye.
Okay, and Frank, do we need a vice chairman of this?
No, Commissioner Notoriani, you can just select the chairman. That's traditionally, as I understand, how the pension board has functioned.
I know I asked a question about who was the chairman at the beginning of this, and we dug up the meetings from the last one, or the minutes from the last one. Okay, opportunity for the public to address the board. Any?
Commissioner, there has been no questions.
Thank you. All right, on that, so we'll make a motion. I'll accept the motion to adjourn.
Motion.
Second.
Okay, all in favor?
Aye.
Aye. Thank you.
Bye, everybody.
Great, thank you.
Debbie.
Okay.
Great day, everyone.
Be well.
Thank you.
Take care. See you, Mark.
See you. Good to see you.
Take care, Mark.
Take care, Mark.
Yeah.
Trace,
I don't
could
think-
do I hit end meeting for all? Oh, go ahead. Here, let me.
Okay.
I'm just signing.